Are you prepared to break free from the conventional notions of luxury and wealth? Unlock the secrets to managing and growing family wealth while preserving legacy. Welcome to Beyond Wealth.
Welcome to another episode of Beyond Wealth, Innovating for Life Elevation. Today, I'm welcoming Mercedes Zhang to the show. She's a key member of the Manhattan Venture Partners with a strong understanding of and importance of building a strong network, understanding capital management, and creating sustainable growth for her clients. Mercedes, welcome to the show.
Thank you, Jonathan. Very excited to be on.
Awesome. I always like to kind of start with a rundown. As I mentioned, your company's Manhattan Venture Partners, or MVP. Can you tell me your team size?
Yeah, so we are about 30 people globally. Our headquarters, as the name implies, is actually in New York. And we do have a few other remote offices, one in San Francisco, Istanbul, Mexico City is a big one for us, and then Milan and London as well.
Awesome. And what's your role?
So my role in the firm is currently I'm an associate. I do a lot of like the capital raising for the firm, but also like an integral part of the deal sourcing team. So given like we interact with a lot more institutional investors on my team, a lot of the work that we do is hearing what's going on in the markets, what deals LPs are interested in. So it just becomes like a very natural conversation to understand what we should be looking at as a company. But that's at a high level. We have our deal sourcing team that feeds to our diligence team, and then our diligence team presents to our investment committee.
That's awesome. And so I'd love to kind of just start with kind of your background and maybe any inspiring moments along the way that kind of led you to this unique role and position at MVP.
Yes. So I guess I'm going to have to take it all the way back to and give you like a little bit of my background. So I'm half Cuban, half Chinese. I was born in Cuba, moved here when I was 12 years old. So for me, moving here with my mom and my aunt and my grandma, we are a very matriarchal family. I have a lot of cousins. It's always been like very nice growing up with like a big group of supporters. So I think one, I never felt, especially growing up with women, that I needed to be embarrassed or speak a certain way. I think it's just like the good thing of like growing up in a house with a bunch of crazy Latinas. But the best part of that too was like I was just always encouraged to pursue my passions and stuff. And something that really was very like a kind of, let's call it a culture shock, was when I first came here and I walked down the cereal aisle in Publix, which is a very Florida thing. I remember seeing all the different brands of cereals. And in Cuba, I don't expect anyone listening to the podcast to have ever gone to Cuba, but we only have like one basically bootleg version of like a cornflake or something like that. So for me, I just always was really interested in the idea of privatization and always curious, like, why does the US have all this access where like in Cuba we just have like one brand, one thing. I guess it makes it easier to pick as a consumer because you're not overwhelmed with the options. But it did like a spark of curiosity in me in terms of finance and working in the private markets.
Awesome. Well, that is going back, and that makes perfect sense to me. That now that I've known you here for a couple of years, and when I met you, I really didn't understand secondary market, and especially what you do at MVP, and kind of specializing in that market, really focused on venture-backed technology companies and being able to add value, not just from a capital management perspective, but also some of the services that you guys provide, and really helping kind of pioneer and innovate that space. I'd love to kind of get your perspective on kind of what you guys do as a company and how that has, accelerated you guys into being a leader in secondary markets and helping clients and shareholders, alike.
Yeah, for sure. And I think maybe it's we could take another step back and kind of discuss the differences between primary and secondary and what it means in VC. So primary VC investing typically means you're investing directly into startups, typically during early funding rounds. So think of it as a company sets a valuation and then a bunch of investors come together and put that money towards the company, where secondary really involves buying existing shares from either other investors or employees, and can really happen at any time. So there's like a key difference there. When you think of our company and like why we have become an integral part of the secondary market, is that first and foremost, we started about 10 years ago. Our partners have been around, so our GPs have been around for more than 15 years, and they really started doing this in the era of like LinkedIn, Facebook, call it like those like giants back in the day. And they really saw that there was an opportunity to create an industry that was very nascent at the time and definitely underfunded and underdeveloped. So our first investment was in, I believe, Facebook, according to our managing partner, Jared Carmel. And it was because a friend called him and was like, hey, like I have a bunch of Facebook stock. I don't know what to do with it. Do you want to buy it? And he was like, yeah, I love to. Let's figure this out. And they really saw the opportunity. And I love that vision because it was so interesting and it really kicked it off, not just for ourselves, but also other people in the industry that do the same roles as we do. As a late stage primary investor, if you're not like a top blue chip VC, sometimes it's hard to get access to the call it like the creme of the creme of deals. So maybe in that time, about 10 years ago, if you weren't really in the VC ecosystem, you probably weren't seeing the companies that you wanted to invest. Especially us as a fund, we were seeing that issue. So we were curious, how does the typical family office in Dallas or like in other remote regions in the US and also international, how are they getting access to these deals if we as a VC are having similar issues? So fast forward 10 years now, we really have done about $4 billion in deals within our firm. Our partners have done a little bit more with their predecessor firms as well. And currently we have about $1 billion in AUM. We raised dedicated capital in 4 different vintages, about to raise our 5th fund. And we really use that to, one, use our fund as a principal investor, have skin in the game. So putting our own money where our mouth is and being able to access these companies, do a really small primary investment, and then build in the long term via secondary by developing relationships. So our bias is in secondary as a firm. So we have invested in our capital that we have now, 85% of that is secondaries, and then the rest is primary.
Got it. And so, when it comes to this, this asset class and the secondary markets, I have to imagine that that's very helpful to helping, somebody that's got a portfolio that may be strictly primary or stocks and bonds, of really starting to diversify and having, liquidation events, for example, in secondary. And so I'd love to understand, how that diversification really works when it comes to like maybe the overall portfolio and some of the benefits that you're providing your clients and shareholders as they may, come into an opportunity with MVP.
That's exactly right, Jonathan. And we love to work with earlier stage funds. The venture capital ecosystem, especially in the last couple of years, there's been, and correct me if I'm wrong, but I believe like an emergence of more than 2,000 new funds and new fund managers. And these are fund managers that maybe got some amazing investments, but are coming up to life in terms of fund life, right? So they need some DPI from their investors and return on capital. So that's a great opportunity, not the only one that we have, but that's a great opportunity for us to get access to great deals. So we work with a lot of early stage managers that we respect and come in and buy them out of their equity and their positions. Sometimes it's employee themselves. So we have a part of our business, which is called SaaS, Secondary as a Service. And we typically go to the companies. We do a very small check, anywhere from 1 to 5 million from the fund. And we initiate the conversation with the companies saying like, hey, listen, you might have employees here that have been here for 10 years plus and maybe looking to buy a house or are worth a lot more on paper. And, they probably need money to send their kids to school or whatever it is that you need to use your money for. So it's a really great way to build a pipeline for us of strategic investments, but also develop these relationships with these companies by providing a value add. Since we're not operators, we don't want to come in like some of other folks in the ecosystem and take a board seat. We really just want to be purely financial, strategic investors, get in 2 to 4 years away from that IPO window, and companies that we deem are top performers, top college generational companies that we think will do really well and that will provide us liquidity, since our fund lives tend to be a little bit less than other typical VC investors. So our value add, even to our LPs, is sometimes our LPs, since we have range from like your typical high net worth individual to call it like the multi-billion-dollar family offices, they themselves may hold a position that large and we could buy it for them. Or maybe they are looking access for like an interesting deal that they may not have access to currently because there's no primary rounds of funding, and we may have the relationship with the company. So really it's what I like about my role and what I like about our firm is that we really have like a very diversified way of interacting with the ecosystem, when in venture, it tends to be like very strict in the way that it is. So for us to have such a flexible way of working with our investors and our partners, and that involves our co-investors as well, it's really unique and something that excites me a lot.
Yeah, and that you mentioned something there, pre-IPO, and I think one of your mottos at MVP is, it's the IPO before the IPO, right? And it's having that foresight and then bringing a large portfolio to your investors to be able to really diversify. I think there's a lot of great advantages in that, especially with a team of your size. You're still kind of on the boutique side, so you really focus on that relationship capital as much as anything prior to getting into investment. While you don't get into the operations of the companies that you're investing with, you guys do offer advisory services, and something that I've kind of noticed in working with you over the past couple of years is that you guys you go beyond money, and you really start to form that deeper relationship and connection. I'd love to understand how what are some of the advisory services that you guys offer, and then how does that start to play a part in like the strategy for some of these larger companies as they may be looking at IPO, or maybe selling off a larger portion, maybe to you guys in another round. I'm really interested to understand kind of how that part of the relationship works with MVP clients.
Yeah, of course. So the official slogan is "Tomorrow's IPOs today." It's one that our partners love, and it's in our signature, funny enough. But essentially, like we work with companies through our secondary as a service. So investing in the primary, talking to them about building out a tender offer, which is when they feed us employees. And then other times we're helping them clean up the cap table. So they'll refer us, or maybe early stage investors themselves will come to us in the companies that we're already invested in, because we're pretty deep and narrow. We've invested in 61 companies across 10 years, which when you think about your typical VC, that's honestly pretty deep and narrow in terms of the scope of how deep we go and how much money we provide to these companies. So the way that we do it is either working with the companies themselves, or sometimes the early stage investors. So your typical VC that needs CPI, sometimes with the employees, and our advisory services extend beyond that as well. So we have a free research arm. So if you are ever interested, you can either find us on Bloomberg, or you can ask me and I'll sign you up, or go to our website and sign up for our Venture Bites. Well, we do public market style private market research. So our research team picks a company, let's say like Anthropic, for example, and they'll write something about it or talk about the markets on it. And it's always great, like, to kind of get a temperature of what's going on the private market side. And then we as a team, we're always more than happy to talk to our investors and our LPs about like what we are interested in, what we're seeing. In the last couple of years, we were honestly pretty slow to deploy capital, and we saw some folks who were very eager to put money out. And a lot of our conversations were like, hey, listen, we will deploy money at some point. We have the fund ready to go. We're just kind of waiting a little bit because we think that pricing right now is a little bit inflated, and it was just normal because you had an environment where getting capital was very easy. So, you saw with a lot of like companies, there was a bit of a euphoric period in VC. So for us specifically, we were having these conversations, kind of telling our investors to hold off a little bit. And then also we were being very thoughtful about deploying our own capital and our LP's capital, since we have that responsibility to be fiduciary to our investors. But even more than that, like, I think we love to give, and also you learn the most by speaking to folks, and I'm constantly humbled by people around me. Like I work with people that are way smarter than I am. So, and I think that's a really good approach to the world. Like if you are the smartest person in the room, you probably should go to a different room. So I love our LPs because they built amazing businesses, and they build generational companies in their own lives. So it's always good to hear what they're doing and why they're investing in certain things, because they're operators themselves, right? Like a lot of our family offices are generational families that have built businesses their whole lives. So it's always good to hear what they think too and get their feedback. And maybe sometimes having like a fresh perspective from someone who's not in the weeds every day can be very, very helpful.
Awesome. Yeah, that's awesome. And I think, that's just a testament to what you guys have built at MVP. And again, we're here today with Mercedes Zhang. from Manhattan Venture Partners. Something that I noticed, something that's been the hot topic, is Gen AI, and you guys have made a number of investments, Cohere and other ones that have had very large Series C and D rounds now at this point. Just interested to understand kind of your take on the capital markets as it relates to AI. It seems like you guys have kind of maybe doubled down at this point at NVP of really focusing a good part of your portfolio there. I think we believe that that's going to be a big piece that doesn't go away anytime soon, and you either kind of got to get on the train or you're going to get left behind. But just kind of curious your perspective on AI, and how people should be thinking about it, maybe from a portfolio diversification in a smarter way, and not just kind of hopping the bandwagon per se. And what are maybe just some insights that you could provide some of our listeners today?
Yeah, I think the best way to view it is, in the past, call it couple of years, you've really seen that the venture capital industry as a whole has learned a pretty sobering but very vital lesson. And that's like, while venture-backed companies are inherently a loss-making enterprise at first, like, it's not really sound to invest in growth for the sake of growth if it means like destroying economic value. So when we were thinking of deploying Fund 4 in 2021, we really saw the valuations like hit an all-time high. Like, it was very detached from fundamentals. A lot of these businesses were raising at multiples that we thought were definitely a little bit inflated. I think, unsurprisingly, we've seen a valuation recalibration in the last couple of years, which has been great for us as secondary investors. But as you see the market and the IPO window being closed for the next, I would say, like, next year or so, it's good to have a good temperature and not only just diversify yourself as a public investor, but have, like, whatever the financial advisors. I'm not a financial advisor, so I'm assuming like having like a good spread of like bonds and other things and whatever, and art and whatever people like to invest in these days. Personally, I find that secondaries is, for me, it's interesting because I like the aspect of like being just close enough to the IPO window where you can own the asset, but not where like you're kind of making like bets like 2 or 3 months before these companies are thinking about going public. So it definitely carries a special sauce. And I'm not saying that we're the best. There's definitely a lot of competitors in our industry that are amazing as well. But that's something that we're really thoughtful about in terms of like investing in like just like whatever hypey industry is going on. Like, we've heard the term AI, and a lot of companies try to, sell themselves as an AI company when they don't really have like AI really behind it or the software behind it. But the way that I see it is that AI is here to stay. I think it definitely has a lot of repercussions to other industries. And when you look at, like, for example, let's take it way back to something that maybe our listeners may understand a little better. When you looked at like the Myspace and Facebook time, Myspace had the leading first company advantage, but the product wasn't nearly as thoughtful or like as good as a Facebook product, right? So although Myspace kind of made the headway for Facebook, they ended up losing out to their competitor, which was Facebook, right? So we think that a lot of these AI companies are great assets to have, and we are really proud to own a few of them, the ones that we really like. But definitely, there's a lot of them that are still up and coming that will be winners in their own field, in their own way. So being thoughtful about not getting too excited over like the deals that people are really excited about. Like, maybe sometimes it's good to take a step back and not get that 10x, but get that 4x or get that 2x, which is how we look at our investments here. Like, that's why sometimes we're okay with missing some of the weddings, but missing all of the funerals, right? Like, we rather just it's a funny thing that I heard someone say, and I really liked it. Like, we generally rather miss out on like these like 10x companies, but then get them at that 4x when we feel like the risk is a little bit less intensified, because the private markets are risky to begin with, right? Like, it's a lot less regulations in the public market, but it is a great way as an investor to diversify your net worth, in my humble opinion.
Yeah, and you mentioned some good things there. And one of the things that we really focus on this show is around like legacy preservation and that importance there. And whether you're a family office, an individual, a business, in public or private sector, one of the best things that you can do is have a thesis on kind of who you are and those guidelines, right? Maybe that constitution for your family. And It sounds like you guys do, a really good job at NVP of really sticking to that. And I can't applaud that enough, because it's just so important that if this is who you are and this is who you want to be, that you need to follow that kind of true aim all the way through. And I know we've had conversations where you guys might have taken a position and you felt great about that investment, but then another round came where maybe you would follow on, and then you just take a pass because it just doesn't feel right, or the attributes aren't there, and it just isn't a great fit for what you guys look to do. So and you mentioned earlier, you about 85+% of your funds go to secondary markets. And so while there may be a small piece of things that you do on a primary side, everything for the most part fits that thesis. And I can imagine that that's kind of really helped propel you guys to being leaders over the last 10 years, and really knowing your true self.
Thank you. I really appreciate that, and I'm sure MVP as a whole thanks you. But it's definitely true. Like I think like as a family office or investor, like it's good to get other people's opinion. Maybe not just us, because obviously, like when you're talking to us, like we're gonna think our companies are amazing because we live and breathe them every day. But it's good to connect, which is why the aspect of like networking is good, because we do it too as a VC. Like we ask other people, like, hey, we saw you're in the deal. What do you think of the company? Or hey, we saw you passed on it. Why did you pass? Right? Like we love to get the temperature of other folks in the industry, and I think that family offices and investors need to work the same way. Like you should be asking, I don't know, friends of yours that are looking at the deal or pass on the deal why they did that, right? And I typically like I love to network with people and meet new folks, and I'm really happy with the network that I built. But I especially love meeting people through referrals, because I think that that always initiates a conversation with a very trust and openness that it's hard to get when you first meet someone. Um, and that's like I love referring people to each other and other funds that we think are incredible, that we think like do a great job, and something else that maybe we don't do, but our LPs want access to, or some of our network wants access to. And there's a lot of competitors in the industry that I definitely respect. And it's at the end of the day, like you got to pick whoever you feel comfortable with working, and definitely do your diligence. I think that sometimes people get a little bit excited, and there are deadlines. Like we have deadlines to invest capital of whatever it is for whatever deal. It varies on a deal by deal basis, but if you're able to do your diligence, I couldn't stress this enough, because I think it's very important not just to do diligence on the fund, but also the asset yourself.
Yeah, and I think when it comes to strong networks, right, something that you're really good at. I've appreciated having the opportunity to meet you at a family office event that we both attended, and kind of hit it off there, and we've been connected ever since. When it comes to building network, I think one of the questions I had was kind of what you're looking for, but I think you just kind of answered that a little bit, in that you know it might be hard to start, but once you get a really good core network, the best way to grow it is through high trust relationships that you already have in place. We're doing that together right now, and looking to help each other out. And so I think is there anything, any like other strategies that you use when you're looking to build network? Certain or associations or organizations that you might be involved with, where you're seeing a great return on your time investment there.
I think it's just about doing things that you're passionate about, because I think that people are attracted to people that are passionate. And you could be talking about coin collecting, but if you're really excited about your coin collection, like you'll draw the attention of the person you're talking to. Like I personally do a lot of networking with organizations that I'm excited about. So for example, like Women Entrepreneurship Day, which is run by Wendy Diamond. I absolutely love Wendy. She's a great friend in the industry, and I love what she does there. I'm really involved, and I'm actually the city lead for New York, for La Familia Foundation. So I'm part of the VC Familia team as well. And it's a network of over 400 Latin folks across the US that do VC investing. And because I grew up in Cuba and I understand what it's like to grow up as a Latina, and then seeing the adverse effects of it in terms of like not having enough venture backing when it comes to their companies, I just love going to these networking events and meeting folks that just like me have found a way into this very unique ecosystem. So I think that being passionate about what you do is important. It's not just showing up to an event and trying to talk to the first person. I always try to gravitate towards people that I feel like are really, really happy, or just seem like they're really either interesting from like a passion perspective or from a learning perspective. It just depends who catches my attention that day. Like Cheryl Campos is one. She runs the La Familia Foundation, who is such an incredible person. She's was in the Forbes 30 on 30 with Jennifer Lopez and a bunch of other amazing women. Like she's fantastic, and you can tell she's really passionate about what she's building there. So I just like to surround myself with passionate people, and honestly, trusting people. That's a really important thing here because like you can trust the wrong person and things can go really, really bad really quickly. So I value having trusting relationships. So people that are honest and high integrity is something that I enjoy about people, and that's why you and I have such a great relationship and conversation all the time because I do feel like you're very high integrity and always very passionate about what you're building. And most people would talk to you and you're very like relaxed and happy and they don't even know all the amazing things you're building. So I love that about people too. Like humility is one of my favorite things in folks.
Yeah, no, that's awesome, and I love the impact that you're making. Both culturally and also from a female perspective as well. I know that we've connected with some really great other funds and founders that have a female founder focus, which is awesome. And yeah, I mean, I think when it comes to everything that we do, the number one uh, you know uh, goal is to preserve legacy, and again, going beyond wealth, right? The whole point of why we've created this show is to really help people get to that point where they've built a platform and a brand that will allow them to be remembered for the things that really matter. Because at the end of the day, I view money as a tool. It's a very important tool, but it's a means to do some of the things that we want to do, on the philanthropic side and the giving back. And when we talk about capital, on this show, the only currency that we talk about is relationship capital and really securing that. And it's been great to to experience how you do that. And everyone I've met through you seems to be very happy. So again, kudos for sticking to that thesis. But let's kind of moving away from building networks. A lot of us are very busy, and so always curious and interested to learn what are some of the things that you're doing, Mercedes, to be able to help kind of have a good work-life balance and maintain not just professional relationships but personal relationships, and really kind of keep that mental health and wealth, as an individual.
Yeah, for sure. And I promise I'm not getting paid to say this. Like I genuinely mean it when I say our firm is amazing. Like we have really great work-life balance. Our team really cares about that. Like I know like a lot of people think that working in VC, you're supposed to grind 24/7. And there are times where it's a grind, honestly. But like I think something that our partners really value is like encouraging us to take our vacation days, like letting us, if we have like emergency appointments or we have to have a Friday off just because we have to take care of personal things in the home. They're very flexible. They don't care what we do or how we do it as long as we're getting work done. So we come into the office at 11 or 12 p.m., which obviously no one does because, I think 9 a.m. is a good place or a good time to stroll into the office. They don't care though. Like they're very flexible about where we work. And even with like, especially as a global team, not everyone has the luck or is lucky to be able to go into the office and spend time with the team. So working from home sometimes, sometimes you have things going on, so you just have to be able to do what you need to do. And I think that honestly, as a team, keeps you energized because it makes you feel like you're appreciated and that you are welcome and that you don't have to do things because you have to, it's because you want to do them. So honestly, if anything, I impose a lot of my own stuff on myself just because like I enjoy the work that I do. I definitely try to read a lot, although sometimes after reading all day and learning about stuff, that's the last thing I want to do. So other times, just like really turning off and going to whether it's a hike in the Appalachian Trail or somewhere in the Smoky Mountains or something. Like I love to do nature stuff or nature related things. I feel like it's a really great way of disconnecting because I'm on my phone all day, whether it's on calls or whether it's like texting or emailing or whatever it is. Definitely, I feel like sometimes it's good to be in a place where you have no signal because then it forces you to be present with whoever you're with.
Yeah, for sure. And I think when it comes to leadership teams, I think that sounds like you've got a great one there. I know I met a couple of people in your on your team, and it's no matter what type of organization you are or what you're doing in life, if you're able to put people first and prioritize them, they're going to make better teams, and better teams are going to make great companies, great organizations, and really help you guys achieve the aim that you're looking for. And so, putting people first and really focusing on building a strong network and preserving the integrity of that over time is what we've been talking to Mercedes today about. And I hope that everyone has enjoyed listening to her insights as much as I have today. We've really, taken a deep dive into, an interesting and unique position that NVP has taken, and we're thrilled to know them. I'm thrilled to know you, Mercedes, and thank you so much for being on the show today.
Thank you so much, Jonathan. I really appreciate not just the friendship, but also you giving me a chance to, rant on here. And so thank you for everything. Appreciate it.
Awesome. And then just for our listeners, where can they find you guys online?
Yeah, so if you guys are ever interested in getting in touch, you can go to fvp.vc or email me directly, follow me on LinkedIn, whatever is your call. Mzang at mvp.vc is the easiest way to reach me. I'm happy to answer any and all questions. And if you just want to have someone to chat with about the markets, always love talking about the markets.
Awesome. And for those of you that listening enjoyed today's episode, please follow us on your preferred channel. Your support helps us get wonderful guests like Mercedes to join us and give us insights and perspective on things that go far beyond wealth as we continue to help innovate to elevate. So thank you so much and have a wonderful day.
Thanks for listening. If you found this conversation valuable, please leave a review on your favorite podcast platform or watch the conversion unfold on our YouTube channel @EstateSpace. We will see you next time on Beyond Wealth.